Hello everyone. Today I would like to discuss the relationship between interest rates, stock prices, and exchange rates. On December 20, 2022, the results of the Bank of Japan's monetary policy meeting were announced. It was decided to raise the upper limit of the fluctuation range for long-term interest rates from 0.25% to 0.50%. This is seen as a substantial rate hike. As soon as the news came out, the stock market experienced sharp changes. The Nikkei stock average eventually fell to 26,568 yen, 669 yen and 60 sen lower than the previous day. Why do stock prices fall when interest rates rise? If the interest rate is 1%, 1 million yen becomes 1,010,000 yen after 1 year. If the interest rate is 2%, 1 million yen will become 1,020,000 yen after 1 year. Calculating backwards from here, 990,100 yen at the present time, or 100 divided by 1.01 million yen, will become 1 million yen in 1 year. In other words, 1 million yen 1 year from now will be worth approximately 990,100 yen at the present time. Since the value will increase by a factor of 1.01 after 1 year, the value 1 year ago would be the value divided by 1.01. This is called the discounted present value of 1 million yen 1 year from now. What if the interest rate is 2%? Since 1 million yen will become 1,020,000 yen 1 year from now, the discounted present value of 1 million yen 1 year from now will be approximately 980,400 yen if valued at the present time. If the interest rate increases from 1% to 2%, the discounted present value of 1 million yen in 1 year will decrease by about 10,000 yen. By the way, what are the benefits of owning stocks? First, you have the opportunity to make a profit by selling the stock at a higher price than you bought it, called a capital gain. Second, if you continue to hold the stock, you have the right to receive dividends, called income gain. Focusing on the dividend, you can be received in the future, such as 6 months, a year, or a year and a half from now. Using the discounted present value concept mentioned earlier, the discounted present value of the future dividend will fall as interest rates rise. This means that the stock price, which represents the right to receive the dividend in its consideration, will also fall. Of course, stock prices are not determined by interest rates alone. It is determined by a complex interplay of various factors, including the assets held by the company, its future prospects, and social conditions such as Corona. An example is the sector whose stock price rose sharply on December 20, 2022, as mentioned above. Where is it? It is the banking sector. Rising interest rates mean improved earnings for banks, so their stock prices will rise sharply. Mitsubishi UFJ Bank is up 6% on the day, Sumitomo Mitsui Banking Corporation is up 5.3%, and Mizuho Bank is up 4.0%. Incidentally, the latest change in the long-term interest rate fluctuation ceiling has led to an increase in the interest rate for 10-year fixed mortgages from January 2023. We have included this information here because we believe it is a very rare case where stock prices move so textbook and cleanly. Please note that the purpose of this video is to provide a brief introduction to economic theory, not to solicit investments or recommend buying or selling. Final investment decisions should be made by the investor. Let's also look at the exchange rate on the same day. The exchange rate between the US dollar and the yen was hovering around 137 yen to the dollar. But after the results of the monetary policy meeting were announced, the yen suddenly appreciated and plunged to 131 yen to the dollar. Some people may feel uncomfortable because the numbers are getting smaller, but the yen is appreciating because the amount of yen that can be exchanged for $1 is decreasing. Of course, exchange rates are not determined solely by changes in interest rates, but are a complex combination of various factors. In absolute terms, US interest rates are higher, but because Japanese interest rates have become relatively higher than before, the movement to buy yen and sell dollars has suddenly become more intense, which is thought to have caused the yen to appreciate. In today's Economics in Your Life, we discussed the relationship between interest rates and currency exchange rates. See you again. Thanks for watching.